Good morning. It is 7:57 a.m. Tuesday, November 1st, just minutes away from the New York session open. Start of the new business month, November here. And again, before I get going with my pre-market analysis and trade ideas, it is important to remember that this week, investors are primarily waiting for Wednesday as we have the FOMC statement and the Fed interest rate decision, where it is widely anticipated that the Fed will be raising rates by 75 basis points. That is primarily priced in here. But what's even more important, what people are going to be looking for is there going to be any pivot language? There's a lot of rumors going on that is propping up stock markets, that is propping up these risk assets in anticipation of the Fed slowing down their pace of rate hikes coming into the December meeting and consequent meetings, right? So if there's any sort of pivot language, any sort of slowdown, any sort of dovish pivot, the market's going to eat this up, and they've already anticipated this. Now, tomorrow, if there isn't any, or if it is more of a hawkish surprise, we're going to be in for a major correction and repricing and a continuation of the higher time frame trend. So, having said that, tomorrow is the major event for the week and even for the month, frankly. So, investors are going to be sitting on the sidelines, especially today, the day before this major event. So, going through the economic data with that in mind, we do have some data coming out after the New York Stock Exchange open. 9:45, we have manufacturing PMI, which is forecasted to be the same as previous. And at 10 a.m., we have the ISM manufacturing employment, ISM manufacturing PMI, and JOLTS job openings. All expected, well, actually, the manufacturing employment expecting a little bit of rebound, slight drop in ISM manufacturing PMI, and a slight drop in job openings. So it'll be interesting. This is pretty much the last data points that the Fed will see before they come out with their statement tomorrow and before they make any decision, right? So I don't think that this is going to have a huge impact on what the Fed is going to come out and say, but short-term impact on the market could happen if we do have a major surprise beat or miss, right? So we've got, for these data points, if we have data coming out positive, higher than expected, higher than forecast, well, this is seen as a positive sign for the U.S. economy. A strong U.S. economy means the Fed is going to have to be more aggressive with the rate hikes, which is going to have a negative impact on risk assets, positive impact on the US dollar. And the opposite is true as well. If we have data coming out worse than expected, well, this is going to have an actual positive impact on the stocks and risk assets and a negative impact on the US dollar, as bad data pointing towards recession, weak economy means that the opposite is true. The Fed's going to have to be less aggressive. So keeping an eye out on the newsroom and data coming out later after the New York Stock Exchange open. So far, we've had a bit of a rebound here. VIX fading out that gap to the upside to start the week back towards the lows, showing optimistic sentiment. Stock market here, US 500 just printed a new higher high here, fresh 1 hour break of structure here. So we got buyers stepping back in the markets here, back testing these previous highs from last week, showing some consecutive bullish candles here. So as long as we're staying above this previous 1 hour structure around 3,900, the optimistic sentiment is holding, leading up to tomorrow's Fed event. right? So optimism is showing in the stock markets. And conversely, on the US dollar currency index, the DXY, we've had a bit of a reversal. As we were playing this dollar strength to the upside here, consecutive new higher highs and higher lows, previous highs here testing structure levels, and overnight we've had Asian and London volume correct the majority of this upside move. So a little bit of a dollar weakness here. However, we are still holding this general area, which is a bullish liquidity zone. Right? So I'm not going to shout out that dollar bears are holding all this strength. I'm just saying that we've had a strong correction. Oops, that's we've had the correction of this previous move, but we're back towards this order block consolidation area, this accumulation of buy orders that led to these higher highs, and now we're coming to retest this. So if we fail to break below, if we don't break below, well, I could easily see, and I would not be surprised to see dollar bulls come back in and we break back to the upside, showing that this short-term optimism is not enough to override the hawkish Fed, because we know inflation is still way too high. The labor market is very strong. Overall, the U.S. economy is holding strength versus the global economies, primarily due to the U.S. dollar domination, right? But there's no reason for Fed to pivot or the U.S. dollar to start breaking back to the downside, as the Fed's mandate is to bring down inflation, and they're bring down inflation back to 2%, and they're nowhere near that goal. So having said that, we do have the short-term optimism, and we do have the Fed coming up tomorrow. So I'm not looking to aggressively take some positions here. We've had this pullback, but I'm anticipating this pullback is just to grab some price at better price levels for the FOMC tomorrow. So we can potentially play some short-term pullback prior to tomorrow, but we are retesting previous levels of liquidity here. Right? This was the previous 4-hour break of structure that led to these new lows. This is also retesting our bearish trend line. And also, if I zoom out to the daily time frame, we're now retesting this key daily level right around here. Right? So we are having a pullback. I'm not going to look to play some buys here, because I do see ahead of the FOMC that this is going to be a short-lived bullish run, and we are coming into some sell-side liquidity zones. We have just printed a intraday new lower low. We broke below these lows, and these lows. So the last sell-side run had some strength here, that we broke significant structure levels from this pullback. And I do see that even though we've had the short-term relief rally, so to speak, breaking above these minor levels of structure, we are still overall just correcting about 50 to 60% of this move here. Right, so I'm not going to jump into some buys just yet, or some sells. I'm going to be very cautious. We do have a little bit of signs of rejection at this daily break of structure. So aggressive buys could be in play right at this level here, as we do see a little bit of a slowdown from this 1-minute price action coming into these key levels. And then we've had a higher low, a weak support being formed, liquidity grab, and sellers take over here, and now we're seeing multiple rejections of this zone. So we potentially have created a lower time frame liquidity zone here right next to our daily break of structure, 1654 key levels. So it'll be interesting to see if this holds and we start getting some sells from this level. But again, if we're looking to aggressively sell at these levels, remember that we are playing this counter. We are counter to the short-term trend. We are playing the higher time frame sentiment, but just manage the trade accordingly to see potentially if the dollar is going to hold this level. Then we can extend that these gold sells, and if we have stock markets start to reverse at these double top levels, well, that's another confirmation to take some gold sells correctively back from these important levels, 1654, that I'm looking at here. Very important level in the market here. So that's it. I'm looking for, again, this level to hold for potential aggressive, high risk, high reward sells, but not looking to buy unless we break back above this level. We show signs of dollar weakness breaking below this liquidity zone. So if we break back below this zone, well, then I could continue that sentiment. And if the US 500 starts to break above this previous high, well, then I'll adapt to some gold buys above this level.